What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily updates as well to get you prepared for the day and the week ahead in this glorious market. So before we get started, we're going to go ahead and throw this up here. Now, this week was a big week, more on the back half of this week, but it's kind of essentially set the stage on what's going to come for the next couple months. Again, we are coming into May, so it was the first full week of May. Typically, in May, you have when in May, sell and go away. And we did have to get through essentially our last, what I consider our last like earnings mode week, because something I've talked about and I talk about on every earnings is you essentially have the first about 3 to 4 weeks of earnings. You get all your industry leaders, and so that essentially the market makes up its decision after all the earnings, which again are strategically placed depending on the sentiment of the market. Then go from that point. Now there's going to be earnings for the rest of Q2, right? But ultimately, understand that the market starts making its decision and will move, given off the information that it's gathered essentially from the earnings. And so this past week was essentially the last real full week because we were really waiting for Apple. All the big techs, all the other big industry leaders have already gone, but we had strategically placed Apple on a Thursday because of the fact that we had monetary policy and all that. Plus, we had non-farms as well on Friday. So what we were looking for was to make sure that everything kind of played out. And then if it got really nasty, we could just go ahead and take it into the weekend. But key takeaways from this past week, we raised another 25-point basis move that was highly anticipated. There's no way Powell's going to go 50-point basis move at this point unless for some reason inflation starts screaming back up. But on the same token, you're also asking for big trouble, as you could be taking out some of your top 5 banks. You start raising 50-point basis move at a whack. So in essentially potentially pausing interest rates is also a huge issue as well, as if we do pause, it's still going to do damage to the economy, right? Like we still do damage to the banks and to the housing industry because of the fact that you know high interest rates affect bonds. They're very rate sensitive, as well as housing loans and stuff are very rate sensitive as well. So with that being said, it was 25 points is essentially all I could do because inflation is still high, right? Inflation is still at 5. We are coming into a week where we will get another core, so that's going to be extremely important this week. But nonetheless, the 25, we're already getting massive. That was a big thing too, that I want to touch on here in a second. But Jay Powell, after the 25-point increase, he essentially came on. He is very well at skating around questions, and he did that all essentially through um, the whole Q&A session after the monetary policy had come out. And again, he came in he's very smart, as being put in those particular positions. You need to not draw panic. And so, in knowing that everybody's hanging off every word that you have, it was very smart of him, in my opinion, to come out with saying that he didn't have an opinion on if we were going into recession, which was a very key thing I was looking for when coming into this week. He did kind of mention a mild recession, but it was very brief when he did mention it. But he pointed to looking at the meeting notes, and that's why I highlighted it here on this weekly recap, because those FOMC meeting notes are going to be extremely important, because he had mentioned that in there was a lot of opinion, essentially what reporters were looking for on a recession. Now we've talked about it to this point. A lot of stuff are reporting a recession. Elon Musk has said we are in a recession. There's a lot of right, and understand that expectations for earnings have been in the dirt. So if you missed by a lot. So with that being said, we still have the banking crisis going on, and ever since we talked about First Republic this week, we've had more banks starting to go under. We had like probably like 4 or 5 banks They were really they just started bottoming me out. I mean, they were losing like 10 to 12%, if not more, if I'm not mistaken, on a couple of them. A lot of these regional banks are now starting to get affected by what's currently going on. And then the thing that really irritated me over the past week with the banks was you had this huge sell off, and then I think it was Thursday morning, you had a statement essentially come out. I believe it was from the Treasury that essentially said that they were concerned with the heavy manipulation on the banks, essentially selling the banks off. That there was talks about not allowing people to short the banks, which is absolutely absurd because they're manipulating the banks so much anyway. It's essentially that case that you do as I say, not as I do, as they are heavily manipulating everything, and then come on Friday because everything got essentially smashed into the ground on Thursday. All these regional banks, JPM came in and upgraded all the banks that were failing. Those 5 banks that were failing on Thursday and dropping by a lot, they upgraded them all, so they all popped right back up. Which is absurd when after they just released a statement saying that it was being heavily manipulated. So with all that being said, coming into Friday or Thursday, we had Apple earnings. Now, Apple earnings was expectations are low. Like I said, they still did well, right? Considering expectations, looking at numbers from last year, they are doing horribly bad, right? And understanding what's currently going on. So you are seeing a huge reduction. And so this is something I talk about. Like you have to take that step back and kind of look at the full frame, because where we're at compared to last year or some of the other years, we've dropped a lot. Now, being said, we go from that essentially we come into Friday, the market just starts ripping back up. So all the selling that we had essentially from the banks, the regional banks all week, essentially was recovered all on Friday. And then you get jobs reports that come out, and the revised versions adjust negative 78,000 in February, negative 71,000 in March. So even though, people are, they're saying that everything's good, we're in a growth recession, people are working multiple jobs to keep up with the rate of inflation, right? People are not only that, but there are people that are working remote jobs, are working 2 remote jobs at once just to try to cover for everything, only for the company to find out that, again, they're working 2 jobs because they just aren't even opening their laptop, and then they get fired from one job nonetheless. So again, very interesting current situation that we're in, but a lot is reflecting what is currently going on and us going into depression and a deep recession, in my opinion, if Fed continued to raise rates. Now, the thing that Powell did mention is that they've essentially worded everything, and everything he's saying now is it all essentially just depends, right? And so he's been saying that for a while, but now it's more adjustable into the document that come out for monetary policy. Again, that is essentially more fitted towards that model, that it is really data dependent on what's going on, the current market state of what's going on. So with that being said, that was pretty much last week. And then coming into this week, the biggest thing we're looking at this week is the core. We got core CPI on Wednesday. We got core PPI on Thursday. Again, core is going to matter more. We want to see if it wants to continue to drop. Again, if for some reason that starts pushing up, that is definitely not going to be a good sign, because that means the Fed might have to start getting a little more aggressive, and they're already at a point where stuff is breaking. So if you want them to continue to be more aggressive, you're going to see a lot worse things happen. And this is why it could lead us into a very deep, dark recession if the Fed continue to hammer rates at such a high, rapid pace. Even, back in the late 70s and 80s, when we had that huge inflation spike, right? That's compared to now, we are accelerated at such a much faster pace when it comes to increasing rates than then. But ultimately, understand that it was built up over years of time as well. So we'll see. Like I said, everything always has a lot of stuff rhymes, but nothing's ever the same. So we are living through a very historic moment. There's a lot of things that are just out of whack. The gauges, all the normal economic gauges that you use, are completely out of whack. um, and so that's what's interesting, right? And potentially very, very, very concerning, right? We deal in probabilities, and right now the market isn't breaking up. The only reason the market isn't breaking up because it's scared to put risk on, right? We've been stuck in this channel for a very long time, and that's exactly it. Is that we don't have you don't have the trust of the consumer right now, right? Because we don't know what's going to happen over the next 6 months, especially in these next 6 months, because we are starting to see a lot of recessionary numbers. Upcoming events: the next monetary policy is until the 14th. Again, core is on Wednesday, so that's going to have to be a big one we're going to be watching. Some upcoming earnings that I am watching. Again, there'll still be a lot of earnings over the next couple, essentially over the quarter. But ultimately, the ones I'm watching this week, again, we're going to start getting a lot of smaller companies at this point. Palantir is a big one I want to watch. There's a lot of potential talk about them joining the SPX. It's been talk for quite a while, so we'll see that happens there. Airbnb is a big one I want to watch. I do like that company. I don't like the CEO, but I like the model. So I just want to continue to see how they're prospering through this time. And then UPST, that used to be a stock I really like. That's a not buy now, pay later algorithm. It's AI driven as well. So that I did really like. I like the model that they have. Problem is people aren't paying back their loans. And so I want to see how much of a hit that's taking. So that one's more of a, I want to again dig into the report and kind of see what's exactly going on there. And then Wednesday we do have Roblox. Again, there's tons of other earnings out there, but these are the ones I'm watching. SPX, we are looking at 69, so roughly about kind of where we're standing last week. Tesla at 8, BA 6, JPM at 4. So a lot of things are, or like I said, we're getting into May. So this is normally a time period where not a lot of action goes on, right? Like volatility really starts to die out. Things start to kind of sell off. Nothing really happens during around this time. So it's really hard in general. So with that being said, we're going to have to see what happens over the next couple of days. And more so what we're waiting for is recessionary numbers, and continuing to watch banks, right? Essentially till the next earnings cycle, right? So now that Apple has essentially done its thing, I will see how much further it may run for another day or two. May get even potentially another week of maybe running. I don't see us breaking out at all, especially from this level. If you want to look at this level here, at 4,200 has been a hard stop. I don't see us breaking out of there. Again, there's nothing positive for us to push out of here, but there's a lot more negative that could potentially happen. We get more banking failures. That could be an issue. Again, at some point, the Fed might jump on and start pausing. See, that's something you want to keep an eye on. I don't think it's going to be this week, but I think that's coming a lot quicker than a lot of people think, especially with a massive amount of big banks that are just dropping like flies. So we'll see what happens from there. But as far as ranges, again, watching the 4,200 for the top. If we break up that, again, we'll be right in that top range up to 4,300. I don't see us breaking that until we start like cutting rates and stuff, and we get through that process, which is hard to tell when it's going to happen because the market keeps fighting not going down, but we don't have new bad news for us to drop, right? Like we're getting a lot of bank failures. That should be extremely concerning, as that means a lot more people are also going to start losing their jobs, right? And credit crunch, all the people that are living on credit cards aren't going to be able to pay their bills, more delinquencies. There's going to be a lot more problems. And so with that being said, we're still holding as of right now. So it's just waiting for something more massive that's going to put fear into the market and will drop us. So we'll see what happens there. Bitcoin still holding strong for that roughly that 31K. We'll see if it can break this week. If not, this thing could start rolling over. Like I said, it's really based off of what the market's doing. Again, I don't see that breaking out. If it does, it does. I've started buying a little bit in some positions, just in case we do start to run up. But ultimately, again, I'm still waiting for the other foot to drop. There's bigger issues going on here, like I've stated multiple times that I think is going to happen, and Bitcoin's right there with everything. I think until we get into next year, and then at that point, it's a very different story. Over the next couple, like I said, Q3, I think will be the worst of it, and if we dive to a new low, then that would kind of be what I am expecting. But if we don't, I'm still okay to just adjust into positions on when we start pulling back off of this earnings cycle. Because like I stated, you have 3 weeks after the actual earnings happens. You might get a run for a couple of days after that, but after that, then essentially the market adjusts and it pulls back naturally, just so it can essentially build up for the next earnings cycle. So what it does, at least you get like 3 to 4 weeks where it just kind of sells off because the hype of the earnings mode is done, and then it just adjusts and starts pushing back up again. So it's kind of what I'm looking for there. Let's see, Tesla got a little bit crazy on Friday. It had a lot of gas, but again, this is at top range right here, roughly around the 171 where we closed. We'll see if it does open there. It could potentially gap up to the 178. Could be a possibility. But if it can't break back over this, we might look at this thing rolling back over and potentially selling back down. Again, we'll see. Again, we're out of earnings mode. Tesla has about another week before it really kind of adjusts and could start pushing back up from that point, if not already, because it's been almost 3 weeks since they reported earnings. So their selling cycle might be close to an end. And then that's just giving the state, right? And then you kind of just deal with market state and what's currently going on with the market at the time. That could make adjustments from there. Palantir, this is a big one I want to be watching on the way down. This one hasn't been holding as well. It does have earnings on Monday, so I want to see how well it does. If we can get back down to the 6, that'd be great. If we can't, that's fine. I think anything below where it currently is a good buy in my opinion, especially if you're looking more long term, which I am for Palantir. So we'll see moving forward. I like what they got going on moving forward. So it's a position I'm slowly building up over the next couple quarters. So as long as it doesn't start skyrocketing and start really running, I'll try to accumulate as much as possible around this area. BA finally showing weakness, like I said, but it still needs to break the 195. We'll see if that's a possibility today or this week. If it does, it could really add some heavy sell pressure. Again, trying to fill this massive move up. I'll try to combat that roughly around the 158. I think is a strong possibility for BA. JPM, again, broke retest. We'll see if this is a break and a retest, and when we start selling, I didn't really gap fill. It kind of touched into the gap, but we'll see if this thing actually comes back down this week and starts filling that gap. And then, like I said, we have this other gap we need to fill that would bring us down to the 106. So again, banks are going to be a big thing, at least for this kind of dead period, aside from like a specific data like core that we have this week. So you're going to have to really watch banks, especially like headline news is really going to be important around this time. Because right now you're kind of getting that dead cycle because it's no earnings mode, no nothing. Now it's just all waiting on data and waiting on the next thing to break. So, and that's why, and I say that because again, we raised another 25-point basis move. So banks are under even more pressure. So we'll see what happens going forward. Goldman Sachs, again, very weak. It doesn't have support here at the 323. You'll see if we can break this and potentially head down to the 298. Or it's got a top here at the 344. So we'll see what happens there. Bank of America, again, extremely weak. All the banks are very, very weak right now. So we'll definitely have to watch these and see where we go from there. But that is pretty much what I got. Not really a whole lot. So like I said, the next couple of weeks will be just waiting on news and seeing what happens in the couple of data sets that we get. The market will move off the data sets. Core could be big. It depends on how it moves. If it comes down even more, like we see as a more positive sign, if it pumps back up, they could be very, very worrisome. So we just want to keep that in mind. But Aside from that, I do appreciate you. If you have made it this far, go ahead and drop a like. And until next time, I'll see you guys later.